Hello, good afternoon. You have tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. The markets, a bit of a good day coming in for the markets. Friday for the markets. 1% uptick that we're seeing coming in for the benchmark indices. Nifty holding on to 24,800 levels, above that mark, almost nearing 24,900. So that'll be interesting to watch out for over there. We have the broader end of the market. That's too performing in well in today's trading session. So broader end, so mid cap as well as small cap holding on to gains of 0.8%, almost mid cap, day's highest point there. Small cap too is holding on to gains of 0.9%, day's highest point. Do not forget they opened up, there was a bit of a red that came in for the Nifty mid and small cap also, and that then we saw that recovery coming in. Let's look at the Nifty bank also. That's managing to hold on to green in today's trading session. So versus what we saw yesterday, today is a better day coming in, and Nifty bank holding on to gains of 0.8%. Now the sector that is not doing well today is pharma. I would like to pull that chart up as well. Nifty pharma is down almost 0.6%, so keep an eye out on that. That's the only sector that is actually trading in the red. Apart from that, we have all the other sectors that are trading in the green. But this is a show where we solve all your stock related queries, and that's what we'll be doing with our experts for today. Shahina Mukadam, independent market expert, as well as Vaishali Parekh, Vice President, Technical Research at Prabhudas Lilladher. Afternoon, Shahina, as well as Vaishali. I think we're set, right? Fridays, we all three have to be here. And Shahina, when are you treating us is going to be the question. Markets are today in the green as well. Let's take a check from you today. What are you expecting in terms of markets?
I think the markets are pretty steady, and I think it will be more, earnings driven. So it will be stock specific, and there is a sector churn. But at the same time, I think a long-term investor needs to remain invested in the market because we are seeing continuing buying. So yeah, remain invested, be stock specific, do not over leverage.
Okay, be stock specific, do not over leverage. That's the word coming in there. On that note, let's get started with all those stock related queries that you all have sent us. The first query for today is coming in from Prashant Kumar, who's writing to us from Bangalore. He's wants to know if it's the right time to invest in ICICI Bank. If yes, what levels can he invest this at, and what is the time period that he should be keeping for ICICI Bank as well? Vaishali, afternoon, and ICICI Bank, your view coming in, what are the right levels to enter this one?
Very good afternoon, all of you. Yes, so ICICI is one of the banks in the private sector which has been outperforming, and it's done very well. So according to me, well, since it's run up, I won't say this is the right level, but stocks like these, one should have a SIP view of accumulating this stock, that buy at every decline, because the long-term projections are much more, and I think can accumulate right from, I don't think this stock should go below 1300 levels, and right now it's at 1450. So accumulate at every low that you get an opportunity.
Okay. And Shahina, your view coming in for ICICI Bank, we have all the numbers for private banks come in. Is this the best bet in the private sector banking space, or should the viewer look at something else? And if ICICI Bank is the right bet, what are the levels that they can look to enter at?
Yeah, so this is one of the stocks that when I mentioned that you need to be stock specific, so in this volatile market, it's better to play into and buy into something like ICICI Bank. I would be comfortable, I hold also, and I would be comfortable adding on ICICI Bank even at current levels. Of course, you need to keep a stop loss maybe close to 1,300 and odds, but at the same time, if you see the quarter numbers, they were pretty steady. So you saw 18% growth in terms of your profits, and while the loan growth at 13% may have been lower than what we have shown over the last couple of quarters, I believe it is better than what the overall market did. So to that extent, it was a good number. And in terms of price to book, also at about 2.5, 2.6 times 1 year forward, it's not expensive. It's got all its subsidiaries in place, which are growing well. So I would say ICICI Bank is a good bet for the long-term portfolio hold.
Okay, let's move on to the next query now for today. This is coming in from Anil Bhandari, who's writing to us from Bangalore. He's holding 25 shares of Interglobe Aviation. This is purchased at a price of 5,300 rupees per share, so making some bit of a profit on this one. Now he wants to know the future outlook of his investments going forward from here on. Vaishali, on the charts and technicals, what are we watching out for in terms of the move that is expected from Interglobe Aviation?
I would say it has maintained a very strong long-term trend also. So I would say for now, if one has to make an entry or if one is holding, I think continue holding. We are looking at a near-term target of 5,800 and all going well above that, it can go towards 6,300 levels also. So, well, continue holding with the trailing stop loss.
Continue holding, trailing stop loss. First level to watch out for is 5,800, then can go up to 6,300 as well. That's the target coming in from Vaishali. Shahina, your view. We just had the results that came in on Wednesday post-market hours. So yesterday we saw that reaction coming in because of the earnings. And there were a lot of brokerage notes also, right? Citi, MS, Jefferies, all of them were positive on the stock. But one that was not is Investec. They have maintained a sell. So which side are you on? Are you on maintaining and holding on to your guidance and holding on to the buy, or would you say it's time to get out of Indigo?
So I'm in the middle actually, because on a top-down approach for airlines, for the long term, it's a risky sector to hold. So this sector needs constant review. Having said that, on the positive side, there's very little competition out between Air India and Interglobe. And if you see valuation also, it is not that expensive. If you see EV by EBITDA is just about 6 times. So I would say that with crude oil prices, airline, the fuel price remaining manageable, I would say you could continue to hold Interglobe. They're doing better on all parameters. So it's a hold, but keep reviewing the stock.
It's a hold, but keep reviewing the stock. That's the view coming in from Shahina. Let's move on to the next query for today. And this is coming in from Jayesh Menon, who's writing to us from Kerala. He's holding 1,055 shares of HAL. This is at a price of 3,500 rupees per share. Obviously, he's making a profit on this one right now. Stock is almost near 5,000, right? So he wants to know whether to continue to hold this or time to get out, book in your profits as well, and look at something else. Vaishali, on the technicals, your view coming in for HAL. Obviously, there's no doubt we have seen the run-up coming in the recent times for all these defense names. But HAL is one of those names also. Previously, also, we had seen a very sharp run-up coming in the last couple of years. And then now it had become a bit subdued. But again, in the last few weeks, that run-up is there. Charts, what are they indicating? Should we expect a further run-up?
You rightly said, Vinith. So for all this while, we were seeing a good euphoric move coming in the defense stocks. So HAL is one of them too. We have seen a one-way rally coming from 3,200 to now at 5,000. So technically, on technical parameters, 5,000 acts as a little bit of a resistance. But if time is not a problem, I would suggest the stock needs to be held on, because I think long-term projections, we still see upside coming towards 5,600, 5,800 in times to come. So I would say hold.
Okay. Hold coming in from Vaishali on Hindustan Aeronautics or HAL. Shahina, your view coming in for HAL, right? Because some of these defense names do have a very high valuation, which becomes a concern at some point of time. Should the viewer continue to hold HAL or maybe book out some bit of the profits right now?
Yeah, actually, valuations look expensive. I would agree. But that is like, if you look at last quarter numbers, take for example, there was some accounting provision write-offs, etc., which actually resulted in a weak sort of, optically weak type of numbers in terms of growth on both the top line as well as on the profitability front. Having said that, if you look at the order book position, it is very strong. If you look at the margins are pretty high, over 50% margins. So if you ignore the valuations for now, while it's expensive, and take the next 3 to 5 years, I believe you are going to see a very good growth. They are targeting almost 12 of their aircrafts to be delivered in the current year. So I see the turnaround starting to happen even in starting FY26. So it's a stock I would say continue to hold for the long term. It could be part again of your long-term portfolio.
Okay, it could be a part of your long-term portfolio. Continue to hold. That's the word coming in from Shahina. Let's move on to the next query for today. This is from Sandeep, who's writing to us from Hyderabad. He's holding 15,000 shares of JSW Infra. Price is 290 rupees per share. Currently, also the stock is trading around the buy price, so not much of a difference in terms of the buy price and the current price. Now, he wants to know the outlook for the next 1 year of the stock. What should he do? Should he continue to hold, sell, maybe look to buy some more? Vaishali, your view on the charts?
So, well, if 1 year is the horizon, I think the stock has been quite a laggard. It's just been, in a very narrow range. But, well, I would say on technical parameters, 270 should act as a support. And once the stock moves above 300 levels, I think this should be poised to take a further run up towards 360. So, for now, keeping 1 year time frame in mind, hold with a stop loss of 270.
Okay, hold with a stop loss of 270 is the view from Vaishali. On the fundamentals, JSW Infra, what is your view coming in here, Shahina? Should the viewer continue to hold or maybe just get out of it, given that they're not making much of a loss on this front? Or would you say average also as an option?
No, I would not say to average as of now. I would agree with Vaishali that you hold with a stop loss of 270. Basically, if you see the last quarter numbers, they've done about 5% growth in volumes. And but if you look at the longer term, next 5 years, the management has indicated that they're planning to double their capacity from current levels. So they're close to a full capacity utilization, doubling capacity over the next 5 years across all the 4 ports that they are currently operating at as of now. I think will be a good volume growth for them, as well as I would believe that profitability also should improve. So at current levels, I would say it's a hold.
Okay, current level is a hold that is coming in from China as well. But on that note, we're going to slip into a very short break, viewers. And here's some good news coming in for you all, our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on the screen. Welcome back to Your Stocks on CNBC TV18. We still have with us Shahina as well as Vaishali to solve all those stock-related queries that you all have sent us. And keeping it going with the queries, the next query for today is coming from Sai Charan, who's writing to us from Andhra Pradesh. He is asking if it is the right time to invest in Punjab and Sind Bank. Shahina, your view, Punjab and Sind Bank, is that something you would be betting on in the banking space?
Well, I would say as of now, it is better to avoid it. It's a small cap. The thing is, the government was 98% of the equity. And they have already indicated it is one of the banks which they are planning. Either the bank will do a QIP, there'll be some sort of equity dilution. Offer of sale for equity shares. So this is an overhang on the stock, which is why I believe, and combined with this is that the valuations are not cheap. It's about 2 times price to book. But at the same time, the operational performance, if you've seen FY25, was extremely strong. They showed strong profit growth, good growth across all parameters. So I would believe that they will, the stock will consolidate at current levels. So if you want to add, you add it post the QIP or some sort of when this overhang of equity is removed. So I would say don't add now, avoid.
Okay, don't add now, avoid is the view coming in from Shahina. On the technicals, Vaishali, do you have a similar view?
Well, I would think otherwise because technically speaking, the stock has corrected right from 70 odd levels. And now, after coming back out of its oversold zone, the stock is showing some signs of revival. So I would say, disciplined trading can be considered. 28 should be taken as a stop loss. And further conviction comes only about 32 levels, which would trigger a further upside move coming towards 38 to 45 levels. So a calculated risk at this juncture should be taken.
Okay, calculated risk is what on the technicals is something that you can take, but there is a stop loss price also that is, and a strict price also that is mentioned by Vaishali. So keep an eye out of that one. Let's move on to the next query. Balaji is writing to us from Bangalore. He's holding 700 shares of Lakshmi Organics. This is at a price of 290 rupees per share. So currently making a loss on this one. Wants to know if he should stay invested or exit at the current levels. What is your view coming in on this one, Shahina? What should one do with Lakshmi Organics? Does it merit that one actually stay invested in this stock?
Well, it's not one of my topics, wouldn't be in the sector, chemical sector. At the same time, the stock has corrected substantially if you see the last couple of quarters, 2 quarters, 3 quarters. And this is on back of poor performance, both in terms of turnover, profits, margins, everything was impacted. Now, going forward, I would say it's a hold. One, given the fact that valuations are not that expensive. If you look at it from turnover to market cap to turnover, it's about 1.5 times, which for a chemical stock, it is not expensive. Two is that they have got new capacity that is coming up of fluorochemicals. So that will come on stream over the next couple of quarters and it should sort of improve their performance overall in terms of growth. So I would say you add, you hold it for now, but keep a stop loss and review it after 6 months, depending on the performance. Either you exit or then you can continue to hold and then exit at a bounce.
Okay, that's the view coming in there for Lakshmi Organics on the fundamentals. Technicals, what is a view for you, Vaishali? Given that, the stock has seen a correction, does it merit maybe they can average it so that at least the loss that they're making is reduced?
I totally agree. So, because actually we see some revival coming in the chemical sector. And this too, I mean, if I were to talk, it shows signs of bottoming out of 170 levels. So, I would say at this level, you can average it out and wait for a bounce. I mean, for now, I would see a target of 240 from here on. I would have a relook once the stock goes above 240 because that would confirm a good trend setting in. So yes, at least for bounce back purpose, it merits for a good buy.
Okay, for bounce back purpose, it merits a buy also. So thanks for that view on Lakshmi Organics. But again, we have a query coming in, and this is again a defense stock that we have. Parag is writing to us from Navi Mumbai. He's holding 100 shares of BEL. Price is 275 rupees, making a profit. Stock price currently at 384. He's asking whether to book profits, buy more, stay invested. BEL, your view, Shahina, similar to HAL?
Yeah, actually, valuations are, as you had mentioned earlier, have become a bit expensive. The stock has gone up, if you see last 3 months, 50%. So now if you look at it on PE basis at current levels, it's, more than 53 times PE, 1 year forward. So to that extent, it is expensive. Having said that, if you see the order book position, it's over 71,000 crores, which is about 3 times their estimated revenues. So there, and with margins are very high. And of course, as you know, the performance that they showed in the last skirmish and the war that we had with Pakistan, they have shown that the products are very effective, and we've had a lot of new countries that are coming in to buy from India, and BL is on the forefront to execute those orders. So I would say that you can continue to hold for the long term. Here again, it can be part of your long term portfolio.
Okay, can be a part of your long-term portfolio. BL, your view also, Vaishali, similar to HAL, or is there an option actually maybe to look at some of these smaller defense names also instead of just an HAL, BL? Would that be an option for you as well?
Yes, I do think so because according to me on technical parameters, this has been a perpendicular rise and in deep overbought. So I would say either keep a stop loss, trailing stop loss, or book partial profit and shift to some other stocks which are fairly priced. So if I'm looking at Zen Technology or DCX, these are the stocks which still have not run up to that extent. So either do that or at least book partial profit in BEL. So when you get a chance in decline, you may add more further on.
Okay, that's how we're coming in for BEL. Let's move on to the next query. Sanjay Dikshit is writing to us from New Delhi. He's holding 100 shares of Poonawalla FinCorp. Price is for 51 rupees per share. He wants to know whether he should continue to hold or look to sell. Not mentioned long-term, short-term. So, both the views, Shahina. If it's a short-term view that you want, then does it make sense holding Poonawalla FinCorp, or only long-term is something that makes sense for you?
Actually, there's not too much of fundamental information that we have on the company to really sort of give a long-term view, but it is looking like there is some sort of a bounce based on the management having deep pockets. One, two is the aggressive guidance that they have given. AUM currently is just about 35,000 crores, so it is pretty small if you look at it in the comparative NBFC space. Having said that, they are talking of taking it up to more than around 1.5 lakh crores over the next 5 years. So if they are able to do that and maintain their cost efficiency, I think it would be a good, investment if you're holding it for the long term. But at current levels, valuations are expensive. So you need to keep a stop loss, keep a watch, how the performance evolves over the next couple of quarters.
Okay, and Vaishali, your view coming in for Poonawalla FinCorp, because, after we saw a bit of a correction coming in since last year, and then since March, again on the chart, seems like we're seeing a bit of a spike up for the stock. Is this a time that the viewers should continue to hold this? What are the targets for short term and long term for this one?
Well, for short-term perspective, the stock is in a trend, but I would say keep a stop loss of 380 and look for a target of 420. That would be the range for short-term perspective. But if you're still wanting to have a long-term view, I think 360 acts as a support. And on a weekly chart also, if I'm looking at it, it's at a very tough resistance. So unless and until the stock moves above 405, 410, and it sustains above, I think this would go towards the levels of 460, 470. So 410 is the level to watch. Are we proceeding ahead or are we seeing some resistance?
Okay, surely we'll be keeping an eye out on that. But let's move on to the next query. Venkatesh is writing to us from Hyderabad. He's holding 50 shares of Mankind Pharma. Price is 2,901 rupees per share. Wants to know whether he should hold or sell. Shahina, what's your view coming in for Mankind Pharma? We had the numbers also that came in from the company. Seems like slight bit of a moderation was there in some part, but commentary seems to be good because we spoke to the management today. They spoke about growth and guiding a growth of around 25-26%. They've spoken about, expecting some chronic segments to do well as for the company. Your view?
Yeah, actually, right. So they have also continued with the guidance of 26%, 25-26% over FY26. Valuation-wise, it is more expensive than some of the other pharma stocks. But at current levels, I would still say that we can continue to hold because they have got a couple of positives going forward. They have the women health, new products that they plan to really aggressively push. This is from their acquisition that they did of Bharat Serum. So there is a positive. They have got other products in pipeline for diabetes, which they could launch over the next 1-2 years. Their OTC products are doing pretty well, growing 15%. So to that extent, I would say you can continue to hold, but do not add now. If you want to add, I think you could look at maybe 10-15% lower levels to average.
Okay. Can add if there's 10-15% lower, but right now just continue to hold. That's a view coming in from Shahina. But that was the last query for today. So thank you so much, Shahina, as well as Vaishali, for joining in with us. Hope you all have a great weekend. And viewers, thank you so much for sending us your queries. Remember, you can always send us your queries and email us your queries on the email address that is flashing on your screens as well. So do send us your queries. But with that, we'll wind down this edition of Your Stocks. Thank you so much for tuning in. Up next, your closing bell.